Good afternoon, ladies and gentlemen. I do apologise for the short delay there. Had a couple of issues with. Oh, well, it doesn't even matter, to be honest. I couldn't get the streaming software to start recording properly. But rest assured, it is being recorded now. So, hope we're all doing well this afternoon, team. Hello there, Tim. Got Scotty D in the house. Hello there, mates. Matthew, good afternoon to you. Got Jack in the room as well. And H&C. Good to see you guys. Hope you're having a good day today. Oh, boy, did we get some craziness yesterday, though, hey? From our masterclass dribbler, Dribbling Don. The Dribbling DT. Chief Chief Waffle. Yes. But I tell you what, he waffled his way to a 1.7% gain in the S&P. It does make you wonder, doesn't it? I mean, before we've seen so much bullshit. Pardon my language, but I'm just gonna, you know me, guys. I'm just gonna speak bloody plainly. We've heard so much bollocks from this bloke, and he drives asset values, doesn't he? He drives asset values lower in the markets, and then boom! Oh no, I've decided to change my mind, and yeah, there we go. The stocks start rallying again. It's just a little bit. The thing is, though, is someone that unpredictable, you never know, do you? You never know. And also, let's not pretend about anything here. He's still, and the whole US administration is still standing by the fact that a soft framework has been not put in place. A soft framework has been discussed, like very, very early stages. But if nothing can be reached, then military action is still on the table. That is the quote. That is what was said. So there's a soft framework that could potentially work if the EU bends the knee. But if they don't, then military action is still on the table. Have you actually think about what that means, what that represents? I mean, that's a huge deal. It's scary. It's everything that we've been talking about recently. And we're still looking at the markets gaining the crap out of it. I mean, the NAS 100 up, from the initial event there, up this week, 2.67%. We've got the S&P 500 at the moment. We are looking at a total gain from the beginning of the session to the high of 2.1%. We've got the US 30 Dow Jones respectively trading at the moment from the beginning to the high at almost 2.1%, 2.06%. It amazes me. Years and years and years I've been in this industry and been looking at these charts and been interpreting geopolitical and economic data, and it just still fascinates me how sensitive and how dramatic investor sentiment can really be. It's just, I think it's just going to be, what I think it's going to be a case of, guys, and we all know this one. I think it's going to be a case of buying the rumor and selling the fact. I really do. I really, really do. Yesterday, all potential frameworks, blah, blah, blah. But then a couple of weeks' time, there's going to be something that happens, and we're just gonna shave the whole lot off. That's kind of where my head's at with it at the moment. Good evening to you, Braden. Good to see you, mate. So yeah, it's a crazy one, and there was no way to really navigate it either, was there? I mean, this huge move that we had. This move was the original sort of note around tariff reversals or a pause on the tariffs that were being discussed, and then this area here at 7:30 in the evening GMT, that is, was the stage in which he said about the framework. That was the comment about the framework, and just that mere comment about the framework, considering the military action was still on the table, caused a reaction in the markets that grew them by 1.1% across the board. Equity markets as well. I don't know if you guys have checked any of the major equities, but they absolutely pumped on that news yesterday. So, yeah, pretty crazy stuff. Now, again, I will just touch upon the fact that it was impossible to navigate yesterday. It was a really, really difficult session. We were looking at, in hindsight here, it's such a beautiful thing, hindsight. We've got these margins laid out and the moves are really, really clean. But for the most part, it was a very difficult market to trade. I mean, 230, that put us at this area in here. So that was that kind of continued staggered move up to this point of liquidity. We weren't going to be interested in trading from there up to there. That's just insanity. So we had to have waited then all the way down 5 o'clock. We kind of broke structure. By this point in time, I was already, I was more focused on the fundamentals and not so much on trading them. And at this stage, we then get that massive buyback. But the whole process of this was taking place around a big point of liquidity, and we were kind of flipping around on either side of it. So it's a very, very difficult market. Looking at the NAS 100, very much the same thing. Coiling around big liquidity here. We obviously, we didn't get the short anyway, but at this point in time, it was 7:30 in the evening when the second stage all kicked off. And by that stage, none of us were really interested, It was, pretty crazy stuff. Very volatile. Natural gas is currently trading at 526, which is almost a touch above big liquidity up here. We're almost going to the most recent major high, which is where we ended up cutting our profit. So, I mean, if we get a break of structure outside of that area there, well, I mean, that won't really mean too much to us. We want to see a daily break, close, and retest of this area. But if that happens, I mean, we could be looking at something much, much bigger. I mean, the next major point of liquidity above that one is at 640. The size of this move in natural gas, absolutely, absolutely incredible. Look at that daily candlestick yesterday. That is one hell of a candlestick. Traded from 393 low to a 518 high. Make no mistake, that is very close to 30. No, actually, look at that, guys. From the low to the high of that candle ended up being 32.8%. From the low to the high. That's a big, big day for natural gas. Huge day for natural gas. I mean, this is a volatile asset, but I think we can go back pretty far in history before we're going to see something that's of a similar magnitude to yesterday's gains, possibly this move in here. That was in 2022, but if you consider why this may be taking place around 2022, of course, it's COVID times. We had a couple of them around here, a couple of 30% days, I would say, and that's all in around that 2022 period of coronavirus. Of course, we're going to get the crazy ones there, but yeah, it's a big one. And just to think, I mean, this isn't really, at this stage, this is really sort of focused around weather events and stuff. There is obviously the situation developing with Iran, but the main cause of this is production facilities have, or some of them have gone down at a time where demand needs to be increased tenfold to counteract the severe storms, severe winter weather cycles that are going on over there. So yeah, it's an interesting one. In terms of everything else that's been going on today, we've got a nice price action pullback that took place in gold, and we came right the way back down to the level that was designated yesterday. So we did set out this level for the potential for a price action pullback based on the open and close of the previous two daily candlesticks, and we came down to it. We touched down on it absolutely perfectly, and from that point on we have continued trading higher. It is range bound at the moment. It doesn't really sort of present itself with confidence invoking, but I think it probably is going to be long, green and strong still at this stage. It really, really heavily depends on how this quote unquote framework pans out from the DT. Looking at where we're trading at the moment, we're at 48.20. It would be good for us to come back down, maybe get a secondary retest before we continue back up. It was impossible to take this last night, so don't feel like we've missed out any kind of opportunity here. The break of structure for this opportunity would have been at 480.20, which is exactly where we're trading at the moment, and that's because the open of the previous bearish candlestick was there. It was a really big candle that took us right the way back down there. So nothing we can be nothing can be done about that one. I think at this stage, guys, it's probably prudent just to leave this go into next week. In all honesty, looking down at silver again, not really much to discuss there. It's been range bound. We're looking at Monday, 19th of January. So that's a week. That's a week of ranging in silver. Not really seeing too much of that one. We've got the AC, which, I mean, it would have been really nice to go for a second leg on this. Absolutely beautiful move up here. We've ranged predominantly throughout the majority of the Asia session and the European Open this morning. But following the break of structure that took place at 11:15, unfortunately, last night, it was a real mover. So that was quite a nice open there for the Asian session. It went right up to the high of 94.12, which was pretty decent. But, you know, we've done well in this one. But it would have been nice to see that nice breakout of the range. I think, based on the daily time frame, we should be looking at the retest of that next week as well. We were ranging in there on the daily chart for quite some time. This is a big point of liquidity in here. Lots of cash in the market. I think this is a really, really extended daily candlestick today. It's looking quite nice, quite large. And I think next week we'll probably look at the slowdown of that one, possibly at around 94.20, and then the retest taking place, and then we can get in on the continuation thereafter. So that will be quite nice for next week's pipeline. Aussie NZD, that was that. Yeah, we already knew about that one, didn't we? That was there. I don't think anything else has really happened. Euro NZD's continued trading lower. In terms of fresh FX trading opportunities, I gotta be honest, I'm not really feeling it at the moment with everything that's going on. Today is the last day of the World Economic Forum. Marks the final sessions and stuff going on today. So we should still be on the edge of our seats in terms of random volatility strikes. Okay, it's important to know. We're still going to be looking at trade the US indices, the full scope of the US indices this afternoon, but just be aware of it. Just be aware of it. If you haven't done so already, because I appreciate there were some of us talking in the general chat and it's pushed the messages up. But I did compile a full analysis and breakdown in bulleted points, easy to digest stuff for everybody. I put that in the general chat, and that's just what's been covered so far in the World Economic Forum, and the main sort of takeaways and highlights from that. Today obviously doesn't count, but that's up to the moment where I posted it. So please feel free to go and have a little read through there and get yourselves up to speed on what's been going on there. And that's about it, guys. Yeah, I think that's about it. The only other one was oil, wasn't it? And yeah, we were looking at the breaker structure for the big push up. We never actually got that in the end. It didn't come back down until now. There is the possibility for a buyback opportunity now that the market's finally come back down here. We do also have the potential for a baby channel, which has just started to form. Very early in its maturity, but it is getting there. It is getting there. We've got quite a nice series of established highs and lows here now, especially considering the last two have really pulled this one together. So it might be nice to consider going long Brent back up to 65.15. So I'd be happy putting some money on that. Yeah, I'd be happy putting some money on that one. So you're looking at around a 1 to 2.5 on the long. And I'm happy to send that one out. That'll be a dedicated trade idea. And that's about it. Yeah, that's about it. Because, I mean, we're waiting for everything else, aren't we? It would be nice if gold came back down to the low here. Let's get ourselves a point of structure. So probably at about that level there. Now that we've had these series of lows form. And we'd be looking at the market coming through the floor, down into this point of liquidity, and then getting the rally back. I think targeting 48.80 is a little bit optimistic, especially considering that we're on Thursday afternoon now. We've only got really one more trading cycle left, but it is doable. I don't really know what to do. It's a decent trade. It's a good trading opportunity, but I'm not sure if this time of week is the time for it. So I'm going to send out the analysis, but please note that this is analysis. It's not something that I'm definitely going to take. If I definitely do take it, you guys will be the first to know, as always. So don't worry, you're not going to be left out. But I'm just not completely sold on the time price ratio. I definitely don't want to be stuck in anything I don't absolutely have to be over the weekend, if that can be helped, because of everything that's going on around the world. You often find that these things take place over weekends, and so you get back to the charts and bang, you know, you've got a huge gap you've got to deal with, or you know, you go from a significant amount of profit into a loss. So again, verdict's out on whether we're going to be taking it this week, but let's see how it pans out. Right, let's move up into the US. Actually, no, let's go into the European indices and just check this out quickly. So today was not too bad in terms of the available margins to trade. The initial breakout, as I mentioned already in the general chat, my initial entry was a bit flaky on this one. I did pull a fast one. I felt the need, guys, to pull a bit of a fast one on this, because ultimately the breaker structure was supposed to be this level down here, which would have been, you know, that's what I wanted. The front running in the market, we already knew which direction this was going, because we saw the market sort of, you know, already priming itself to do so in the morning hours. And then at 8 a.m. we had this candle up here and the pullback, and then I just took the breaker structure trade initially from there, it completely ignoring this level in here. And if we go back in time, make no mistake, that is a breaker structure point that I traded into. Make no mistake about it. It was a coin toss trade. There's, again, just being completely transparent here, guys. It was a coin toss trade. The initial trade was sent out on the proviso we could get in on this breaker structure. I got in at a very late entry, and I just had to suffer it. It was either get in there underneath this breaker structure point because I wanted my stop loss down below, or wait for the alternative, which was to wait for the break and close outside of this area to get in up there, but run the risk that the trade will be wiped out from a price action pullback. In my particular case, the coin toss was the correct choice to, you know, it was the correct run, but it's not something that we will be repeating here at all. And then subsequently, once the market reached the high up here, we did get a really nice rejection. Lower lows formed from the top of the range and a move all the way back down to the lows, which are one of the free members. I don't really know who he is. His name's Ryan. He joins us on a Wednesday sometimes. Actually took the damn thing. Managed to get himself a nice trade idea, trading between the lines. So that was good to see. The rest of them, not bad. UK FTSE had a significant sell-off. Broke structure there. That was about 11 a.m. So not really within our trading times necessarily. But nevertheless, it was a real decent move. Went straight the way back down to cash rich 1016, which was decent. And we had the EU 50 trailing behind. Not really too exciting on the EU 50 side of things. It's just continued to kind of swim along sideways. Now, US indices. We started here and we're going to finish here. Looking at the availability today, we cannot discount the fact that we are trading above the median of this trading margin. Even though this is a whopping sized trading margin, I can't help but feel if we get the break of structure that's going to be rooted for us. Let's find the route forwards. Yeah, I mean, that's one up there, but we can do better than that. So price action is trading there. Probably this one. Yeah, it's not perfect, but we've got a lot of market retests going on at this level. A lot of retests and a lot of rebounds as well. So I think I'm probably going to be happy using that one. That's the break of structure for it. And then we'll be looking to take the trade from there. And are we going to go to the highs? I mean, that is ultimately where the market's heading, but I fear being stuck in this for a little bit longer than I want to. We have had the opportunity for a nice rest today. Market's not really provided much. It's got a lot of room left to move, just in terms of the ATR, the ADR in this case. So I think perhaps looking for... Yeah, I mean, based on these margins. I mean, the risk reward ratio could be really good, and we still get a lot of defense in there. So I like this one. Definitely a more intraday style trade, but I'm hoping that in light of everything that's taken place, this afternoon's US Open is going to be a bit of a blast. The alternative to that, of course, is yesterday we had a rocket. Today might be completely exhausted, so we may not get much of anything. It will go one of either way. I don't think it's going to be a day where it's okay. I think it's going to be a really big day or a really crap day. So I'm going to go for that on the US 30 Dow Jones long. In terms of the short, there is a clear margin of trade there, isn't there? We've got the high there. Drag that along. That perfectly ties in with the low that we've got. It does mean that the market has a really nice no man's land to trade as well. So it can move around freely without tagging us into any potential losing positions. We've got the low down here. Okay, this is looking a little bit more reasonable than the long, but remember that the market is trading up in the upper sort of half here of the NML. It means ultimately that the market's going to have to fall quite a ways before we get into the trade. So you will be taking that off, because if you think about it, from there down to there, probably is a similar high. It's probably a similar size trade to this, but we're just not able to take the full thing. So I'm going to load up with a potential short from there down to this level, and I'm just going to thin this up a little bit, tidy that up because we don't need it so wide. And I'm going to have my stop loss at about that level there for a 1 to 2.3. So very, very, very different style trades. This is certainly a day trading style opportunity. I mean, if we go down to the 1 minute time frame, the margin between those 2 points, absolutely fine. Fits a lot of bars. Probably could slim that stop loss up and create a better risk reward ratio for ourselves. I mean, I'm still happy with the margin there, and that's a 1 to 2.6. So yeah, that'll be fine. So gonna look for something like that on the Dow Jones. We got the big one, the big brother, and the little brother or sister. Download. Right, next up, US Tech. Big liquidity 25.74. Very, very similar setup. In fact, guys, I mean, this is basically the same setup as the Dow Jones. So we've got liquidity point in there. Breaker structure, I would say, on this one is a little bit preferred than the other. Actually, I prefer, definitely prefer this one than the US 30 Dow. We've got a TRF, which is situated at around 25.666. I'd be looking at this. This is a good long. Yeah, this is not bad at all, this one. We don't have to do anything too risky. The technical analysis is very supportive. It all kind of makes sense. So that's going to be a 1 to 2.43 there. The short is not as nice, I don't think. So we've got this being the breaker structure for the short today. We also have this level in here, which cannot be ignored. And then, of course, we have what we would designate as the target profit down at the lows. So that's a little bit problematic, isn't it? The breaker structure in there is good, but we're going to be running into some trouble pretty quickly. I'm wondering, no, we couldn't do that. Yeah, so I am going to offer a short on the NAS 100 today, because the margins are there and they do look good, but just be aware on this NAS that it could throw us a curveball with that high. The way the market's swooped up like this, come back down. There's definitely going to be some cash in the market there. We can see from the reaction of these two bars predominantly, and the fact, I'll tell you the truth, 15-minute time frame, we actually had an inverted, it's not a hammer candle, is it? But an inverted cross there, which means the market stabbed this level and it's come back down very quickly in the same bar. Now, look, on a 15-minute time frame, it's not crucial by any stretch, but it does show that there is money there. And so the chances are, if we come back down now that we're on top of it, we could potentially get a bounce back, and this could act as a pretty big level of supply. Pretty big level of demand as we're resting on top of it. Alternatively, it could act as a little bit of a chain event. We come down here, we hit those orders that are still in the market for the shorts that were there a couple of days back, and boom, we could get some real speed and pick up some speed back down to 25.39. You just can't tell ahead of time. So that's going to be the plan for the NAS 100 today. And do we need to incorporate the S&P as well? I mean, that is the question. I'm not really sure that we do. We've got some pretty good flexibility between US Tech and the US 30 Dow Jones. So I think I'm probably going to leave the S&P alone today, guys. Yeah, I am. We're just going to stick with the US 30 Dow and the NAS 100. So, yeah, that's about it, really. That's about it. Have a quick flash of the econ. I already know there's nothing going on, really, but we've got the old PCE out this afternoon at 3 p.m. That gives us a good half an hour in the markets anyway. The PCE data that we do have access to ahead of time is not showing anything out of stability, which means it's probably going to be pretty low impact event, maybe a 2 or a 3. I think the market report said it was a 3, if I'm not mistaken. So trust the algorithms, guys. I mean, you know, now and again they get things wrong, but predominantly those things are really, really decent economic indicators. So yeah, if it said it was low, it's probably going to be pretty low. Personal income and personal spend data, again, probably not going to see too much of a difference or a disparity between the two, prior figure and the current one. And then that leads us into tomorrow where we've got nothing going on either. I think that the whole world at the moment is poised on what's going to take place next from the Don, from Mr. Dribbs. So we're just going to have to hold tight and, you know, yeah, keep our ear to the ground about what Master Dribbler is going to do next, you know. We'll take it from there. Right, team. So, anyone got any questions or any concerns or requests? Anything at all? Braden asks, can I get you to look at the USD Swiss? I don't know, mate. It depends. Sure thing, mate. Let's have a look. The USD chef. The USD chef for along. Let's have a look. All right, well, definitely see a target profit. A little beauty in there. I like that. So we're going to be running our main point of liquidity right the way through the highs. It's not perfect, but that is what we've got to work with from an intraday perspective. Is it going to be good enough? I don't know. Some look good, some don't they? Yeah. So I'll put that about there. I don't like the fact that I'm cutting off these highs here, but it's just the nature of the zone, I suppose. It's a little bit choppy. Right, so we've got a couple of options here. First one, the intraday one, is looking, well, I mean, we've got to look for a big point of liquidity to trade away from first. We need to break this down a little bit, don't we? Because at the moment, I can see a flag formation of certain type trading within around there. The flag actually broke to the upside, which is interesting. We're trading back down into this area at the moment. The major point of inflection is here down at the lows, so may have some room to go first before we consider the long. I wouldn't like to take a long just from where it's trading at the moment because it's trading in the middle of dead space. I can't see. Let me just go back in time here. Yeah, that's not bad, is it? So 1, 2, 3. Come right the way through. We've got the median of a W reversal point in there as well. Market is trading through though, isn't it? It is trading through it. We've already had a go. Looks like it wants to continue trading lower. Let's check the DXY quickly. DXY view. Had a bear day, had a median day, and then we've got the day at the moment. 98.60. It's looking weak. It is looking weak. I would expect the DXY to continue trading back down to the high of around 98 on that front. The low of 98 on the DXY is certainly going to coincide really nicely with 78.90, which would be down the low there. And then we can look at the possibility of getting a buyback opportunity. You've got two intraday opportunities. Wait for the rejection of this low to buy back to 79.22. Alternatively, you can look for the next leg up, which is a breaker structure of 79.33 for a push back into the high of 79.57. So that's how I would play that one out on an intraday scale. For a slightly longer term position. Not still within the remit of intraday, I would say intraday, intra-week, but then you would just simply look to take the breaker structure trade right the way back to the top at 80.30. So you would avoid this and not worry about it. You would, honestly, you'd look to avoid that one as well. You would bring this down. That would become your breaker structure. This would become your big point of liquidity in here. We already know this because we've looked back in time. Lots of cash in the market down at these lows. And this is a perfect breaker structure area in here. So then the market comes down. We bid, get the orders. Once the orders are filled, we start the long journey back to 80.30. You've got a TRF, which is the level that was previously removed, which is there. And if you just loosely scan your eyes, you will see that there is equal margin to the on the upside and the downside. 0.8, 0.75. Perfect 50% median, as you'd expect. So that would be the longer term play. Okay, my view, of course. Is that okay though, Braden? It better be, mate. I'm not going over it again. No worries, man. Always welcome. Always welcome. How about anyone else? Anyone else got any requests? All right then, team. Well, listen, I'll wrap things up there then. I wish you all a fantastic afternoon. You've got about 25 minutes to go before the bell rings for the US markets. Please do be careful out there, guys. I know I say it every single day, and I don't care if it's annoying, but please do be careful out there at the moment. It's a real turbulent time. We all know about it. We speak about it every day. But just be aware, you know, all it takes is a couple of words from some idiot somewhere, and that's it. We get massive erratic price fluctuations, and it's impossible to foresee. You can mitigate the risk. You know how. We break this down, we work it out. So please focus on risk mitigation at times like these, and that's going to see you through to the other side. Okay, bring your risk position sizing down, increase the size of your risk reward ratio in terms of making it more loose. So maybe decrease the size of your risk reward ratio. Sorry, would have been the right way to put that. And just and focus on saving that money. Focus on protecting your capital, and that will see you through. Okay. Right, take care then, team. It's been a pleasure as always. I hope you're hope you have a good afternoon, and let me know how it goes. I'll see you then. Bye bye.